Hi, this is a very quick and short video on a topic that I just wrote about. I got a question posed to me yesterday. Uh, Basically, the person who asked this question asked, how can I start my investing journey right now uh, with very limited capital from my savings, from my job, and borrowing from my parents? But I want to pursue investing going forward. And the thing is that my style of investing is majorly long term, where I will not have anything to do for most of the days apart from reading, and also capital is a major concern. So that is the question in a nutshell. Uh, if you want, you can break this question down into two parts. One is how to start investing with limited capital, and the second is what do I do on a daily basis so that I can improve my skills as an investor? Because as a long term investor, you don't have something to do on a day to day basis. So, first thing is most people actually start with very limited capital. Unless, of course, they have a large inheritance or a family portfolio to start with, which is actually very rare in most cases. Most people start with whatever they can save from their job or from their business, and slowly they keep adding to that on a monthly basis, on a regular basis, so that that investment kitty grows up. And I personally think that's actually a good idea, because when you are young, or when you are new to the markets, you tend to make a lot more mistakes. And when you're making mistakes, it is actually better if your capital is lesser. So you when you're making a mistake with 100 rupees and you lose 20, on an absolute scale, that loss is much lesser if you are, for example, investing 1,000 rupees and you lose 200. So it's not a bad thing to start your investing journey with less capital. One thing you have to understand, I mean, at least from my experience, what I have done is, when I started in the year 2000, I'd saved up 5,000 rupees from my first year's salary, first month's salary, sorry. And then, I kept adding 4 5,000 rupees every month. And that is how I started investing. And I presume that that would be the case for most people who start investing today. The number would definitely probably have gone up, because when 25 years ago the salaries were different, today it is different. But main point remains that whatever you can save is what you invest in. Now, so that is the first answer to the first part of the question: is you get started with whatever you have. Keep saving aggressively. Try to save as much as possible, especially in the first uh, you know stages of your career. If you are able to save 30 40%, if possible. I mean, not everybody has the opportunity to be able to save that much. Some will have to save much lesser, some will have the opportunity of saving more. But try to save as much as possible and put that money into your equities, so that over the magic of compounding over the next 10, 20, 30 years can work to your benefit. Now, coming to the second part of the question, which is what do I do, right, on a day-to-day basis? So, from a broad framework perspective, I think first thing for you to understand as an investor is you have to understand yourself, right? What kind of mindset you have, what kind of businesses do you like, what kind of stocks do you prefer. So, for example, I figured out very early that I liked compounding kind of stocks. I liked stocks where I could buy and hold for long periods of time, and where the price of the stock and the value and creation would continue to go up without me having to take decisions on a very frequent basis. So that's what I could figure out. Same way, you have to figure out what you like, what kind of activity. A lot of people get energized by activity. uh, I have a lot of friends who are traders who get energized by doing something every day or every week. There are other people who are very deep value investors, who are very happy buying a stock that does not move for the next 2 years, 3 years, and then goes up a lot. So you have to find what you are most comfortable with. The next is, again, you have to realize how you react to uh, triumphs and disasters. So what that means in the market is basically, if you buy a stock at 100, what how do you react mentally and how do you react emotionally? Sometimes people have physical symptoms, right? People have stomach cramps or back pain, especially when the stakes are very very high. When stocks that you've bought, say, at 100 rupees is down 30%, or when suddenly you've bought a stock and it goes up uh, 40-50% in a week or 2 weeks, right? Both of these cases I have seen people panic. And it's not that people do not panic when the stocks are going up. In fact, I have seen more people panic when a stock that they hold goes up very sharply, right? There's this tendency of trying to book profits quickly, right? I'm not trying to say whether that is good or bad. Maybe we'll talk about that sometime later. But the point here is, you have to assess yourself in terms of how you react, you know when a stock that you hold does really well or does poorly. The third thing you have to understand, or you have to ascertain, is how much effort, how much time you are willing to put in as a amateur investor. You have a 7, 8, 10 hour job per day. The way I try to look at it is, I try to look at it on a weekly basis. So you have roughly 168 hours a week. You're putting in maybe 40 to 50 hours officially in your job. Sometimes maybe more. Let's say you put in, including travel, etc., commute, maybe 60 hours, right? That still leaves you more than 100 hours a week. Now you take out family time and your personal time, etc., that will still probably leave you with between 20 to 40 hours a week. Now, are you willing to put in that effort, that time? And always remember that when you are putting in time and effort into something, you're taking that time away from something else. So you may have to sacrifice something else that you like for putting it into investment research and things like that. So, and that is not a trade-off that everybody wants to make. So you need to ascertain for yourself whether you want to really do that. And the last thing that you really need to understand is, how much skill do you really possess? Do you really have it in you to be a full-time long-term investor? Or may not be a full-time, but at least do you have it in it to do investing by yourself, or do you need help? Not everybody, and there's no shame in that. I mean, not everybody it, it becomes a doctor, or not everybody becomes a lawyer, but and or an architect, or so on and so forth. But if you have to build your house, you'll go and talk to an architect. So similarly, if you fall sick, you go to a doctor. Similarly here, you there are specialists, there are mutual funds, there are advisories, PMSs, etc., etc., where you can sort of uh, outsource your investment function and uh, lead your life in and spend your time in things that you enjoy more, doing more. But if you've decided that, no, I want to pursue this as a hobby, as a passion, then you have to understand whether you really have the skill for it, right? And here, in my opinion, the skill can be learned, right? You have to put in enough time and effort to be able to learn the skill. uh, Also, in the beginning years, I think we all need to focus a lot on earning well from our primary occupation, right? Whether it is a job, whether it is the business that you are doing, try to put as much effort and time into that as possible, so that you are able to generate more income there, which will result in more surplus that you can put in into your investment. And initial years, I think uh, it's not a bad idea to do a SIP in a few mutual funds or ETFs, so that your you are able to build the corpus, and a part of it you also start investing yourself. Uh, so maybe you put in, let's say you save 100 rupees, you put in 70-80 rupees in mutual funds or ETFs, or take an advisory, whatever, and the remaining 20% you start doing it yourself, so that you can get better with your own skill. Uh, so always remember that investing over a period of time can make you very very rich, right? It can generate wealth beyond your imagination when you're beginning. But this is not easy, right? Any endeavor that makes people rich cannot be very easy, cannot be very simple. Had it, if it was so simple, then everyone around us would be rich. But that is not the case, right? Even when we are today logging into our brokerage accounts, we see that 90% people lose money. That prompt keeps coming and telling us that. Now, what that tells us is this is not something that everybody will get right, right? So it requires a lot of skill. It requires a lot of luck, perseverance, effort. So you can only be successful in something which requires a lot of effort if you truly enjoy the process, right? If you love the journey and you're not fixated on the destination, right? You're not fixated that I want to get to 1 crore or x crores, or that much capital in this amount of time. If you're not fixated on the outcome, you're fixated on the process. You love the day to day learning, and you love going through annual reports, or whatever way you're doing. uh, that is the only way you will be able to enjoy the process and stick with it long term. So with that, thank you for listening, and keep sending me any questions that you have, and hopefully I'll be able to answer them.